Greetings. This is eSpin Trinity, and I'm ecstatic to offer my support for the upcoming presentation. Modern banks, modern risks, the decline of bank security. Here's the key takeaways from this topic. Traditional banks versus modern banks. In the past, banks were seen as trusted guardians of our money. They used vaults, in-person checks, and tight security to protect what we had. You knew your banker, and fraud was rare and handled quickly. Today, banking looks very different. We use apps instead of tellers, QR codes instead of checks, and chatbots instead of face-to-face help. Neobanks don't even have branches anymore. While this makes banking faster and more convenient, it also brings new risks. Modern banks connect to many other apps, like budgeting tools and payment services, which creates more ways for hackers and scammers to get in. Anyone with internet access can move money. That's powerful, but also dangerous. And when something goes wrong, there's no familiar banker to turn to. You're often stuck dealing with automated systems that don't know you. So, while banks are now digital and global, they've lost some of the personal trust and safety they used to offer. Declining security. Key risks in modern banking. 1. Phishing and social engineering. Criminals trick users through fake emails, texts, or calls pretending to be the bank. Why it matters. One wrong click can give them full access to your account. Stolen money is quickly moved and can't be recovered. 2. Malware and credential theft. Malicious software silently steals passwords, OTPs, and even screen activity. Why it matters. Even strong passwords and 2FA can't protect a hacked device. Attackers don't break in, they're already inside. 3. Account takeover. Fraudsters take full control of your bank account using stolen or leaked info. Why it matters. They lock you out and drain your account. You may not even know it happened until it's too late. 4. Subscription and microdeduction fraud. Hidden charges from sneaky signups slowly drain your money. Why it matters. Small fees add up and are hard to notice. These are hard to dispute. Banks often side with the merchant. 5. Poor app design and permissions. Banking apps often collect too much personal data. Why it matters. More data equals more risk if the app is hacked. Just one weak spot can expose everything on your phone. 6. Slow or no customer support. When fraud hits, help is often delayed or missing. Why it matters. Time is critical to stop loss and recover funds. Delays can turn fixable problems into permanent losses. Real stories. When banks fail their customers. The silent subscription. A user signs up for a free trial. After 7 days, it turns into a $9.99 per month charge, hidden in the fine print. It goes unnoticed for over a year, costing $140. The bank refuses a refund, saying the user agreed. The SIM swap attack. One day, a user's phone stops working. A hacker tricked the phone company, took over the number, intercepted bank texts, and stole all the money. The bank says it wasn't their fault and denies help. The business breach. A small business links its bank account to invoicing software. That software gets hacked, and thieves transfer thousands overnight. The bank blames the third-party app and offers no refund. The digital financial world is full of risks. These practices help establish a strong first line of defense against increasingly sophisticated threats. Use strong and unique passwords. Use a password manager such as Bitwarden, 1Password. Enable biometrics authentication like fingerprint or face login where possible. Turn on two-factor authentication, 2FA. Use app-based 2FA, like Google Authenticator. Avoid SMS 2FA as it is vulnerable to SIM swap attack. Review linked apps and services. Audit permission. Regularly review which apps have access to your bank. Remove unused or risky connections. Only allow the minimum permissions needed. Monitor transactions and enable alerts. Turn on alerts for every transaction. Report suspicious activity immediately. Avoid public Wi-Fi for banking. Use mobile data or a secure home network. If needed, use a trusted VPN. Watch for subscription traps. Read all terms before starting free trials. Set reminders to cancel before charges start. Check statements monthly for small, hidden charges. Be careful with emails and calls. Don't click on links and messages. Verify callers by using your bank's official number. Never share OTPs or personal info. Modern bank will change over time as technology advances, so does bank security. Embedded finance apps, like shopping or ride services, may offer banking features, raising questions about trust and safety. Digital wallets and DeFi, new ways to store and move money without banks, but come with risks like scams and lost access. Savings as a service, banks might invest your savings by default, offering higher returns while keeping access flexible. AI managed accounts, smart tools may help manage money, detect fraud, and protect accounts automatically. Digital IDs and biometric security, fingerprints, voice, and face scans may replace passwords, convenient but with privacy concerns. Thank you for taking the time to watch our presentation. It's our sincere hope that you found it both valuable and informative. If you have any inquiries, please don't hesitate to visit our website or send us an email at info@e-spincorp.com. Once again, we appreciate your time, and we wish you a fantastic day ahead.